The stock market rose after the Labor Department reported that the Consumer Price Index rose 8.5% year-on-year in July, down from a 9.1% increase in June. Although inflation may have finally peaked, the Federal Reserve is likely to keep raising interest rates until the inflation returns to its long-term target of 2%. Bank of America recently created a pro-inflation stock screen to identify stocks with a strong positive correlation with inflation in the past. While other companies struggle with rising costs, inflation may help these stocks outperform. For investors looking to protect their portfolios from inflation, here are 7 inflation investments to consider. Number 1, Mosaic Co. Mosaic is a company that manufactures concentrated phosphate and potash crop nutrients for the agricultural industry. Analyst Steve Burns says Mosaic's second quarter earnings numbers were in line with his expectations. Fertilizer prices reached all-time highs in 2022 as a result of Russia's invasion of Ukraine, but Burns predicts a drop in phosphate and potash prices in the second half of 2022. Mosaic management recently stated that it intends to return to shareholders 100% of its free cash flow. Burn anticipates $2 billion in share buybacks and the possibility of a special dividend. Mosaic stock, which closed at $60.69 on August 24th, has a buy rating and a price target of $88 from Bank of America. Number 2, APA Corp. Formerly known as Apache, APA is a major U.S. oil and gas exploration and production company. APA returned 43% of its free cash flow to shareholders in the first half of 2022, according to analyst Doug Leggate, and is poised to accelerate share buybacks in the second half of the year. Leggate described APA's second quarter as messy and its guidance as light, but the value of APA's cash flow makes the stock one of the market's most undervalued U.S. exploration and production stocks. Bank of America has a buy rating and $62 price target for APA stock, which closed at $40.31 on August 24th. Number 3, Applied Materials Inc. Applied Materials is the world's leading producer of water fabrication equipment for the semiconductor industry. According to Vivek Arya, wafer fab equipment spending will fall 5% in 2023. Applied Materials' fiscal fourth quarter guidance, on the other hand, exceeded expectations and its semi-systems segment growth is accelerating. Furthermore, Arya claims that the company's gross margins have increased since the stock bottomed in July, and that the company's commitment to aggressive share buybacks should help support the stock. Applied Materials' logic and foundry growth, as well as its 20% free cash flow margins, are also noteworthy. Bank of America has a buy rating and $125 price target for Applied Materials stock, which closed at $101.48 on August 24th. Number 4, Halliburton Co. Halliburton is a leading U.S. oilfield services company. Analyst Chase Mulvihill says strong operating leverage, pricing power, and disciplined spending are all tailwinds for Halliburton. Halliburton's international revenues increased by 20% in the first half of the year, and Mulvihill predicts that the company will continue to report strong growth figures through 2023. Mulvihill forecasts $1.5 billion in free cash flow, or FCF, in 2022 and $2.7 billion in 2023. In the medium term, he believes the company can raise its dividend to pre-pandemic levels. America has a buy rating and $35 price target for Halliburton stock, which closed at $31.66 on August 24th. Number 5, Advanced Micro Devices Inc. Semiconductor company Advanced Micro Devices, or AMD, produces personal computer central processing units and graphics processing units, as well as server chips for data centers. AMD executives are optimistic about the company's data center growth prospects and the benefits of integrating Xilinx into its operations. Arya is also optimistic about AMD's cautious outlook for the personal computing market and pricing discipline. AMD shares are trading at just 21.6 times Arya's 2023 earnings per share projections, which is an attractive valuation for a stock that recently reported 70.1% revenue growth. The stock of Advanced Micro Devices, which closed at $92.73 on August 24th, has a buy rating and a $120 price target from Bank of America. Number 6, SVB Financial Group. Silicon Valley Bank, or SVB, a commercial bank specializing in technology, life sciences, wineries, and private equity and venture capital firms, is the parent company of SVB Financial. SVB shares are down 37% in 2022 as of August 24th on fears that falling tech sector valuations will harm SVB's early-stage venture capital and private equity customers. According to analyst Ebrahim Poonawala, The sharp correction in tech company valuations combined with SVB's second quarter earnings miss and guidance cut has understandably frightened investors. He claims, however, that SVB's core business model is still one of the best in the banking industry. SIVB stock, which closed at $429.50 on August 24th, has a buy rating and a $525 price target from Bank of America. Number 7. Tapestry Inc. Tapestry is the parent company of luxury brands Coach, Kate Spade New York, and Stuart Weitzman. Accessories, handbags, footwear, fragrances, and other items are manufactured by the company. Rising prices are unlikely to deter Tapestry's affluent clientele. According to Lorraine Hutchinson, Tapestry's overall revenue growth should be stronger in the second half of the year as the Chinese market recovers. Sales in China fell 32% in the fourth quarter. Bank of America has a buy rating and $50 price target for Tapestry stock, which closed at $36.03 on August 24th. Before you invest, you must devote significant time to research. However, it is critical not to become bogged down in this stage. There are numerous investment strategies to choose from, but sticking too close to the book may cause more problems than it solves. While developing your own strategy and appetite for risk will take time and strategies can help in the beginning, you should also listen to your instincts from time to time.